All right, everybody, welcome back. You ready for another deep dive?
Oh, always ready to dig in.
Okay, perfect. Well, today we're going to take a look at Tata Steel.
Mm-hmm.
They've been making some pretty big moves recently, and
Yeah, they have.
we've got their recent filing
Okay.
with the Bombay Stock Exchange and the National Stock Exchange of India.
Right.
So this thing is chock full of details about their financials, board changes,
Uh-huh.
and even some interesting stuff about their efforts to go green.
Oh, wow. Really pushing for that sustainability.
Yeah. So it's like a snapshot of a company,
Yeah.
trying to balance
Mm-hmm.
growth with being eco-friendly in this industry.
Yeah, a rapidly changing industry, too.
Oh, absolutely.
Yeah.
And so first off,
Okay.
their board approved the financial results for the quarter and half year
Uh-huh.
ending September 30th, 2024,
Okay.
which, that's pretty standard procedure.
Oh, yeah.
But what caught my eye
All right.
was the new board member,
Okay.
Mr. Pramod Agrawal. This guy, he was the head of Coal India Limited,
Oh, wow.
which is a pretty big name in the energy world.
Oh, yeah, for sure.
I'm thinking this could mean like a shift in their strategy.
Right. It's not just his experience with coal, though. It's
Right.
the whole energy sector, which will be huge as they move towards greener tech.
Exactly.
Yeah.
It does make you wonder,
Yeah.
are they getting more serious about decarbonization?
Yeah.
Especially with all these mergers and acquisitions. I mean, they've snapped up companies like
Yeah.
TSLP, TML, TCIL, TSML, S&T Mining,
Wow.
ISWP, AEL, BPPL, and RIL,
Okay.
just in the past year.
That's a lot to integrate.
Oh, it's a mouthful just to say all of those.
Yeah, it is.
But the filing mentions
Mm.
they use the pooling of interest method for accounting.
Okay.
So essentially like combining everything at book value.
Right. Assets and liabilities altogether.
Yeah. It'll be interesting to see how they handle it all long term.
Yeah.
And it wasn't just stock swaps either. ISWP and AEL, they involved cash payouts.
Interesting.
We're talking 26 rupees a share for ISWP
Okay.
and a whopping 1,045 rupees per share for AEL.
Wow. What do you think is behind the different approaches?
It's going to be a bunch of factors, right?
Right.
Size of the companies,
Yeah.
shareholder structure, the negotiations.
Yeah.
But the filing specifically mentions that the RIL merger was all about simplification,
Mm-hmm.
cost reduction, and streamlined compliance.
Okay.
So I'm thinking they want similar benefits across the board.
Yeah, that makes sense.
Okay, so they're growing like crazy, but they're also
Yeah.
trying to go green.
Mm-hmm.
Tata Steel Europe, they're switching things
Yeah.
up, moving away from traditional production and going towards electric arc furnaces.
Okay. That seems like it would be good for the environment.
Oh yeah, definitely a step in the right direction.
But I imagine the transition has its challenges.
Well, they did acknowledge some climate-related risks, especially for their UK and Netherlands operations.
Right.
Plus, there's the financial side of things, too.
Yeah, that's a big factor.
Well, they did get a £500 million grant
Wow.
from the UK government for the electric arc furnace project
Right.
at Port Talbot, but they're also putting up a lot of their own money.
That's a big commitment.
It is.
Yeah.
They're really betting on green steel.
Yeah.
I mean, the filing talks about using an FVL-CTS model
Mm-hmm.
to check the investment value,
Yeah.
but it also says that changes in assumptions could lead to potential impairment.
So it's a calculated risk for sure.
Huge rewards, but some downsides, too.
Exactly.
And speaking of risks,
Mm-hmm.
there's this whole legal situation
Oh.
surrounding the Urized Act in Odisha.
Okay.
It's a bit complicated.
All right. So what's the Urized Act about?
Well, basically, it's a tax on mineral-bearing land.
Okay.
Tata Steel got hit with demands for over 129 crore rupees
Oh.
back in 2005 and 2006, and they challenged the act in the Orissa High Court and actually won,
Uh-huh.
but then the state appealed to the Supreme Court.
So what happened?
Well, the Supreme Court
Yeah.
ruled in favor of the state.
Okay, so they can tax the mineral rights?
Yeah, but the implementation of the Urized Act is still kind of unclear.
So Tata Steel is in limbo.
Yeah, exactly.
Interesting.
So even though they previously mentioned a contingent liability,
Uh-huh.
they haven't put a provision in their financials.
Makes sense. It's still up in the air.
It is, and it really shows the uncertainty
Mm-hmm.
that companies like Tata Steel have to deal with.
Yeah, especially with the legal and regulatory stuff.
Oh, absolutely.
So we've seen their growth strategy, their push for sustainability, and some legal hurdles they're facing. But what do their financials actually look like?
Yeah, let's get into the nitty-gritty and see what story these numbers tell. Okay, so let's crunch some numbers.
Nice, sounds good.
We've got both the standalone and the consolidated financials, so we can really get a good look at the impact of these mergers and acquisition
Uh-huh.
and the decarbonization efforts we were just talking about.
Right, see how it all plays out.
All right, so let's start with
Okay.
the standalone statement of profit and loss.
Right.
Their revenue from operations was 32,399.48 crore
Okay.
for the quarter ending September 30th.
Mm-hmm.
But their profit before exceptional items and tax
Uh-huh.
actually dipped a bit,
Oh.
coming in at 4,772.02 crore.
Could be a few factors there.
Like what?
Well, the filing shows an increase in expenses,
Okay.
particularly the cost of materials
Right.
and employee benefits.
Yeah, it seems like everyone's dealing with rising costs these days.
It's a common theme right now.
Makes you wonder how long they can handle it
Yep.
before having to raise prices themselves.
True.
And what about these exceptional items they list?
Oh, those are like one-off things that are
Okay.
outside of normal business.
Okay.
In this case, they had a gain.
Of 4.42 crore
All right.
from an impairment provision reversal.
So basically, they thought an asset was worth less than it actually is.
Exactly. It happens sometimes.
So a little bit of good news there.
Yeah.
But then there's that big income tax expense,
Uh-huh.
12,248.60 crore.
Yeah. Can't avoid taxes when you're making money.
True.
What's interesting here is
Yeah.
it includes both current and deferred tax.
Oh, so they're planning for the future.
Exactly. Thinking long term.
Okay, so all in all,
Mm-hmm.
their standalone net profit for the quarter
Yeah.
was 3,842.86 crore.
Oh.
Not too shabby, but definitely facing some headwinds.
Yeah. Bit of a mixed bag.
Okay, so now let's look at the consolidated results.
All right.
You know, with all those mergers, I'm thinking the numbers must have gotten a boost.
Well, let's see.
Their total revenue from operations
Yeah.
jumped to 53,904.71 crore.
Okay. That's a big jump.
It is, but their profit before tax is only 2,164.33 crore.
So the revenue went way up.
Yeah, but the profits didn't really follow.
Exactly.
Yeah.
What do you think's going on there?
Integrating all those companies,
Yeah.
especially with different ways of doing things, it can get expensive.
Okay, that makes sense.
Yeah.
And it looks like they had some big exceptional items too.
Right, on the consolidated side,
Yeah.
there was a small loss on selling a subsidiary,
Mm-hmm.
but the big one is a 3,255.11 crore provision
Okay.
for impairment of non-current assets.
Whoa, that's a lot. What assets were impaired?
The document doesn't say exactly,
Okay.
but I guess it's tied to their restructuring
Mm-hmm.
and the shift to greener tech.
Like that big impairment charge we talked about.
Exactly, probably similar.
Okay, so change comes at a cost.
It often does.
But even with all that,
Yeah.
their consolidated net profits still hit 758.84 crore.
All right, so still in the black.
Yeah, not as high as the standalone profit, but not bad.
It really highlights the complexity
Mm-hmm.
of all these acquisitions
Yeah.
and their shift in strategy.
Trying to grow and go green at the same time.
It's a delicate balance for sure.
It is. So we've looked at profit and loss, but what about their overall financial health?
Well, we can look at their balance sheets
Okay.
to get a snapshot of their assets and liabilities.
Okay.
Let's start with the standalone balance sheet.
Right.
One thing that jumps out
Yeah.
is the size of their property, plant, and equipment.
How much are we talking?
90,740.72 crore as of September 30th.
Wow, that's a massive number.
It is.
No wonder they need so much debt financing.
Yeah, borrowings are a big chunk of their liabilities,
Mm-hmm.
which is normal in this industry,
Okay.
but something to keep an eye on for sure.
For sure. And their lease liabilities have gone up, too.
Oh, that's probably because of those new accounting standards.
Right. The ones where they have to recognize most leases on their balance sheet.
Exactly. Even the ones they used to treat differently.
Okay, so lots of assets, lots of debt.
Mm-hmm.
What about the consolidated balance sheet?
Well, that one includes all the subsidiaries.
Right, so it must be even more complicated now.
Well, as you'd expect, their property, plant, and equipment
Yeah.
has skyrocketed to 1,023,300.45 crore.
Because of all the assets from the new companies?
Exactly.
And their goodwill has shot up to 6,031.57 crore.
Yeah, they're valuing those intangible assets.
Like brand recognition and stuff.
Exactly. The things that aren't physical but still have value.
And their inventories have also ballooned
Hmm.
to 51,171.94 crore.
That's a lot of stuff to manage.
It is.
Inventory management is a big challenge in this industry.
Oh, yeah. Got to have enough to meet demand,
Mm-hmm.
but not too much if the market changes.
Right. It's a delicate balance.
And of course, we have to talk about the debt.
Yeah, it's a big one.
Their consolidated borrowings are now at 67,147.79 crore.
That's a significant debt burden, no doubt.
It is.
But you have to look at it in context.
Okay.
Lots of big companies use debt to grow.
Mm-hmm.
The key is managing it.
Making sure you can still invest in the future.
Exactly.
So they're growing, going green, and managing a ton of debt.
It's a lot to juggle.
What do you think so far?
Tata Steel is definitely going through a major transformation,
Yeah.
but those changes come with risks
Mm.
and financial complexities.
Yeah. We need to dig a little deeper
Absolutely.
to see if their strategy is really sustainable.
We need to go beyond just the numbers themselves
Okay.
and see what they really tell us.
About their financial health and their ability to reach their goals.
Right. We need more context to get the full picture.
All right. So we've looked at the raw numbers,
Mm-hmm.
but now let's try to make sense of it all.
Yeah, put those numbers into perspective.
Exactly. And financial ratios can help with that.
Ratios are really useful.
They show the relationship between different figures
Mm-hmm.
and can reveal trends you might miss otherwise.
Yeah, they can tell a more nuanced story.
Okay, so starting with the standalone results,
Okay.
their net debt to equity ratio is 0.37.
All right, so what does that tell us about their debt?
Well, it means they have a moderate level of debt
Right.
compared to their equity,
Mm-hmm.
which isn't necessarily bad.
Right.
But we should compare it to the industry average.
Yeah, see how they stack up.
And look at their historical trends, too.
See if it's getting riskier over time.
Exactly. And their debt service coverage ratio
Yeah.
is 3.51.
Okay, that's pretty good.
Yeah, anything above 1 is usually a good sign.
Right, it means they have enough earnings
Mm-hmm.
to cover their debt payments.
Both principal and interest.
Exactly, and 3.51 means they've got some breathing room.
Yeah, they're comfortable.
Mm.
And their interest service coverage ratio is even higher,
Oh, wow.
17.41.
That's really strong.
It is. It means they're easily covering their interest expenses.
Yeah, no worries about financial distress anytime soon.
Okay, so their debt management seems pretty solid.
So far, so good.
But what about their short-term liquidity?
Okay, what's their current ratio?
It's 0.71.
That's a bit below 1.
Yeah, which isn't ideal.
It could mean they might struggle
Mm-hmm.
to meet short-term obligations.
If they suddenly need cash,
Right, but we should look at other factors too.
their cash flow,
Exactly, and their access to credit.
to get a clearer picture.
Yeah, a holistic view.
Their long-term debt-to-working capital ratio is also a bit high,
Okay, what is it?
0.97.
That suggests they're relying heavily on long-term debt to
Mm.
finance their operations.
So their ability to generate cash flow
Yeah,
is really important
absolutely. They need to cover that debt.
and meet their working capital needs.
Right. It all comes down to cash flow.
Okay, so the standalone ratios paint a somewhat mixed picture.
Yeah, some good, some not so good.
Now let's look at the consolidated results.
Right, with all the acquisitions.
Exactly, and their consolidated net debt to equity ratio
Mm-hmm.
is 1.1.
Okay, that's higher than the standalone,
Yeah, but a pretty
Yeah.
significant jump
which makes sense with all that added debt.
from the new companies.
Exactly. Their debt now exceeds their equity.
Yeah, they're using leverage to fuel their growth.
It's a common strategy.
But their consolidated debt service coverage ratio is still decent,
What is it?
3.19.
Okay, still above 1.
And their interest service coverage ratio is strong too,
Yeah.
11.64.
All right, so they seem to be managing the debt.
Yeah, despite the added leverage.
But we'll have to see how things evolve as they integrate everything.
Right, long-term monitoring is key.
Absolutely.
But their consolidated liquidity ratios are still a bit weak.
Like the current ratio.
Yeah, it's 0.84.
Still below 1.
And their long-term debt to working capital ratio
Yeah.
is almost 2.
Okay, so that's definitely something to keep an eye on
Yeah, they need to manage their working capital carefully.
and make sure their cash flow is strong.
Right, to meet those short-term obligations.
It's all connected.
So the ratios give us some food for thought.
Yeah, but they don't tell the whole story.
What else can we learn from this filing?
Well, the additional disclosures are helpful. The
Uh-huh.
section on decarbonization, it explains some of the financial figures
Right, like the restructuring charges.
and those asset impairments
Yeah, those are real costs.
of their investments in greener tech,
It's interesting to see their strategic choices.
reflected in their financials.
It is. And speaking of choices,
Mhm.
they're still dealing with that Orized Act situation.
Right, the legal battle in Odisha.
And the filing says They
Yeah.
haven't recognized a provision
Mm-hmm.
for that potential liability.
Because it's still so uncertain.
Exactly. It shows that financial reporting
Yeah.
isn't always a perfect reflection of reality
Right. There are always external factors.
and uncertainties that can impact things.
Absolutely. It's a complex world out there.
So, after this deep dive into Tata Steel,
Yeah.
what's your overall take? Are they on the right track?
It's tough to say for sure.
Okay.
They're clearly in transition,
Yeah.
growing rapidly,
Hmm.
and trying to become more sustainable.
But it comes with risks.
Oh, yeah, for sure.
Their financials show both strengths and weaknesses.
Right. Like their debt management is good so far,
Hmm.
but their liquidity is weak.
And those impairments are concerning
Exactly. It raises questions about the long-term cost.
of their strategy.
It's a bold approach,
It is, but isn't that what business is about?
taking risks
Yeah,
with the potential for big rewards.
exactly. But those risks can also backfire.
Absolutely. There are no guarantees.
So only time will tell
Hmm.
if Tata Steel's moves will pay off.
But they're definitely a company to watch.
Yeah, their decisions could reshape the whole industry.
The steel industry is going through a lot of changes.
It is, and this deep dive shows us
Yeah.
that finance isn't just about
It's
numbers.
about real companies
Making real decisions.
with real-world consequences.
And sometimes we don't know the outcome yet.
It's a dynamic process.
It is. So as we wrap up,
Hmm.
I encourage everyone to stay curious,
Keep learning.
explore the financial stories of the companies around us,
Yeah, look beyond the surface.
dig into the details.
You never know what you might find.
Great advice, and thanks to all our listeners
Thanks for joining us.
for this deep dive into Tata Steel
We'll be back soon.
with another fascinating look at the world of business.
Until then, keep exploring.
And stay informed.